Value investors from around the world are meeting in New York today to talk about investment ideas and strategies at the 5th Annual Value Investing Conference. Bloomberg's John Erlichman joins us again live from the conference with Lloyd Khaner, general partner with Khaner Capital Management. John?
Oh, thanks, Matt. And you were here earlier, hearing from David Einhorn. We heard from Julian Robertson, and Lloyd Khaner joins us now. Just had a presentation. You were talking about some interesting names. I'd first like to get your perspective on gold, because we seem to have a raging debate down here today. Julian Robertson not in the gold camp. David Einhorn is. Do you have a view on the gold story?
Yeah, I have been in the gold camp since before 2006. Not a gold bug, but along the lines of what David's been saying about debasing the dollar, getting weaker. That's my play on gold. And I've right now own the gold mining companies as well as the gold individually.
Turnaround was the focus of your presentation today, and how important the CEO stories are. One name that you are bullish on is JPMorgan. I believe you own JPMorgan shares. You like Jamie Dimon as a leader, as someone, as a CEO who you can count on. Tell us why you like that JPMorgan story right now.
Well, Jamie's the best in the business by far. It's not a turnaround. I mean, clearly they're doing very well. It was a turnaround when Jamie joined them after they bought Bank One, which he also turned around very successfully. But he's truly the best, and he's got a great team behind him.
They obviously have had some management changes recently. What do you think of those changes?
I think that Bill Winters is someone I'm going to be watching to see what company he becomes the CEO of. I don't know what, I don't know when, but it's someone everybody should be watching out for. He's very talented, and they've got another very talented management. I don't think anyone else is leaving, but if they do, I'll be watching.
Some of the other stories that you were talking about today include Starbucks, and you also talked about return on invested capital as one of the reasons why you look at these names. What is it about the Starbucks story that interests you so much right now?
Well, very simply, return on invested capital is just reinvesting back in your own company for a good return. Starbucks, classic problem of chasing growth. They've stopped growing their company. They're improving their operations, improving their offering, lowering their prices, better experience for their customers.
And Starbucks is, in your words, a one-year turnaround story versus longer-term turnaround stories. So what is the difference between a Starbucks and, say, a Campbell's?
Well, for one, you've got the former CEO coming back, Harold Schultz, who did a great job there. He's coming back to run it. And also the problems are fixable in 1 year. They weren't as dire as Campbell's problems, where they didn't run on for 10 years. They were probably 2 or 3 years.
This conference comes on a day when a lot of people are talking about what's going on at Galleon, the insider trading scandal. Is that a black eye ultimately for the hedge fund industry?
Yeah, it's another black eye for hedge funds. I think hedge funds ran out of black eyes about 10 or 20 years ago, but absolutely, it's not good.
All right, well, we appreciate your time, Lloyd.